Okay, time now for our hot picks section of the program. We've increasingly been talking about industrial stocks. There's a lot of excitement in that industry, and our next guest likes them in part, at least the stocks we're going to talk about today, because they stick with verticals that are showing relatively predictable growth. Maxim Sytchev is Managing Director at National Bank Financial, one of our regular guests. It's good to see you.
Likewise.
So we talk with you about the industrial sector all the time, but maybe you can set up the framework for these investments we're going to talk about today as an example.
I got to be honest, like overall the industrials actually are kind of keeping pace with the overall TSX on a year-to-date basis, but there's a gigantic bifurcation between the one that have really rallied on a year-to-date basis, like the engineering consulting cohort, equipment distributors, up 20-40% year-to-date, and then there's the laggards. So today I want to talk about the laggards because I think that's where the risk-reward skew is a bit more positive. While either you're talking about the cyclical rebound, which seems to be pretty forecastable right now, or just the value component is so attractive that even in some sort of dislocation scenario, it still looks pretty attractive from our perspective.
Okay, well, against that backdrop, let's do a little bit of math here on these different investment ideas that you have. ATS Corporation, ATS on the TSX, they design and build factory automation systems?
Yeah, so they would enable the process. So imagine if Novo Nordisk wants to come with a new GLP-1 drug. So for example, those injectors, somebody has to design the process to actually manufacture the gizmo. And ultimately, that's what ATS provides. So it's part integration, consulting, and also selling their own products that enables that manufacturing process. The thing that really dislocated the stock over the last couple of years was their EV battery assembly system. So at some point, it was like a 900+ million per annum revenue generation business. Right now, it's down to kind of like 200. So that was really the drag that unfortunately played out on the back of EV market just falling off. Right now, you kind of look forward, 55% of the business is healthcare, 20% is food, which is very stable, it's not PMI related, and nuclear, which is another 8%. So I think when you kind of combine all of these things, they got a settlement from their EV battery customer. So balance sheet is getting better, thematically very well positioned. I mean, automation is obviously all the rage. Interestingly, Rockwell, which is, not exactly a peer, but in that sort of ecosphere of automation, close to all-time high with pretty spotty execution. And ATS is still down 30% relative to kind of the high watermark of a couple of years ago. So I think at 17 times PE, for that level of quality of the business, I'm very excited about the stock right now. Okay,
well, and that's a helpful comparison to one of its peers there. All right, the second stock that you highlighted was AG Growth, which is AFN. Provides farmers, processors, commercial customers with equipment, but also with some storage, help and storage as well.
Okay. Yeah, exactly. So the thing that transpired over the last couple of years, obviously on the back of geopolitical issues in Europe, at some point corn and wheat just skyrocketed. Then food pricing collapsed and farmers basically delayed decision-making process around do they have to invest in new equipment. So that's sort of the negative trend that we've seen over the last couple of years. And the farm part of the business got really impacted. Commercial side of the business, which is going to be sort of bigger clients, kind of the Bunge's, the ADMs of this world, continues to perform really well. The company's taking market share away in Brazil. And it's one of the very few, I think, in the industrial space, cyclical trough markets. Overall kind of food and ag is under pressure. But again, interestingly, you look at Mosaic share price rebounding, ADM rebounding, Deere's close to all-time high. This thing is 40% below its all-time high. So I think, again, risk-reward skew at 6.5 times EV to EBITDA, that's the time to plow into farm when nobody cares. And that's what we think with this one.
And then on this theme of laggards, Stella Jones, SJ, they make wood product, pressure-treated wood products?
Yeah. At commercial scale. So the biggest end market is wood poles that you will see when you drive kind of in the country for electrical distribution. So that's 50% of the business. Rail ties is another kind of 30%, and then residential lumber. So when you kind of combine all of these things, at some point it was a growth by acquisition story. Company could do no wrong. That thesis kind of played out. Then poles had a dramatic re-rate during the pandemic because everybody was sort of scrambling for transformers, polls, et cetera, there was pinch points around that dynamic. What's interesting right now, obviously on the back of AI, nuclear power, electrical grid hasn't been upgraded in decades in North America. So right now there is that refresh cycle, which is, I think, going to lift sort of all the boats. And Stella Jones just actually made an acquisition on the transmission side of things. And transmission, actually, that's where you see those, gigantic metal towers that you see, again, like in the middle of nowhere, providing high voltage connections. And that's the market that previously Stella Jones did not have access to. So all of a sudden...
But they sort of understand the dynamics.
Exactly. It's because it's the same clients. It's the same utility clients. And so when you kind of look forward, you have the transmission thesis. It changes the narrative around the story. For a while, it was kind of taken for dead. The stock is actually doing okay on a year-to-date basis, kind of plus 7-8% year-to-date. But I do think that the compounding dynamic can actually, resume, and we can have that sort of steady improvement trajectory on a going-forward basis. And it's only trading at 13 times PE, which is, in a very expensive market, to me, seems to be pretty attractive, with the free cash flow yield of close to 7%.
And just a final question. I mean, look, if you can find good deals, why not keep them in the portfolio for a long time?
Exactly.
But just generally speaking, when you're identifying opportunities based on valuation and peer valuations and the prospects for reliable earnings, what kind of commitment do you think you have to make to owning these stocks if the market isn't fully recognizing that right now?
Yeah, I think you have to look at the durability of the trends. I think for example, electrical trend or electrification trend overall,
Big trend.
That's decades ahead of us. So I think that one has very long legs. The ag cycle, that's just the reality. It's just cyclical. I think right now you're picking it up at the bottom. On the automation side of things, again, I think the cycle is pretty visible. Labor challenges, cost pressure, et cetera, and we're trying to re-domicile manufacturing capacity in North America. So I think, it's all sort of a combination of many things, but I do think that these trends are not sort of a flash in the pan.